Close the clinical file, turn off the distracting financial monitors, and let us dissect the collective psychological breakdown currently paralyzing the retail cryptocurrency sector. Welcome to the Behavioral Analysis Division. Today's psychological profile is centered on the absolute cognitive dissonance surrounding the asset known as XRP. The title of this clinical diagnostic session is XRP Stuck at $1.40. Analysts say a massive move is coming, and if you are currently feeling an overwhelming sense of frustration or boredom, you are exhibiting the exact symptoms the institutional market makers designed you to feel. According to the latest behavioral data compiled by social intelligence firms like Sentiment, Retail Engagement, and mentions of a broader altcoin season have hit a historic, absolute rock bottom. The retail crowd is experiencing profound psychological exhaustion. They stare at the spot price anchored in the $1.36 to $1.40 range, and their biological impatience convinces them that the asset is completely dead. But as a trained behavioral profiler, I do not look at what the crowd is saying. I look at what the apex predators are quietly doing while the crowd is asleep. We are currently tracking a massive, undeniable divergence in market behavior. While you are contemplating selling your portfolio out of sheer boredom, the on-chain forensic data confirms that institutional whales have aggressively accumulated over 140 million XRP tokens, valued at approximately $200 million, in just the last 48 hours alone. This is not a coincidence. It is a textbook psychological operation. The market makers are deliberately utilizing the perpetual futures markets to apply artificial downward gravity on the spot price, engineering a painfully tight consolidation phase. They want the price to appear stuck. This prolonged stagnation acts as a psychological torture device for over-leveraged and impatient day traders. It breaks their spirit, triggers their automated stop-loss orders, and forces them to surrender their physical digital assets at a severe wholesale discount. The whales then sweep in and absorb that discarded liquidity in the shadows. You are essentially handing over your generational wealth simply because the graphical interface on your mobile application is not producing enough dopamine to satisfy your severely diminished attention span. If you fold your hand right now, you are officially becoming a predictable statistic in their behavioral models. You must override your emotional programming immediately. The massive move that analysts are predicting is actively being fueled by your manufactured exhaustion. Wake up and analyze the data. Let us transition our behavioral analysis to the entities that actually dictate the macroeconomic flow of capital, because their current actions contradict the retail narrative entirely. While the civilian sector is completely paralyzed by fear and boredom, the legacy banking syndicates are exhibiting extreme, calculated aggression. Just this weekend, we received highly classified confirmation that Ripple has officially expanded its enterprise architecture into the absolute core of the traditional financial system. Ripple Prime has successfully secured a massive integration with Nodal Clear, completely unlocking the institutional clearing of Coinbase derivatives and futures contracts. This allows colossal financial entities to execute precision risk management entirely within a highly regulated framework. But the psychological shockwave does not end there. We are tracking a groundbreaking partnership between Ripple and Aviva Investors, a titanic European asset management firm explicitly designed to tokenize traditional fund structures directly onto the XRP ledger. Do you comprehend the psychological disconnect here? The retail market looks at the $1.40 price ceiling and falsely concludes the network is a complete failure. Meanwhile, billion-dollar sovereign asset managers are deliberately choosing this exact cryptographic infrastructure to secure and transfer their tokenized real-world assets. The institutional players do not care about a temporary consolidation phase because they operate on a multi-year chronological horizon. They are systematically utilizing covert over-the-counter dark pools to fill their acquisition quotas. The United States spot exchange-traded funds continue to absorb hundreds of millions of dollars in physical tokens, bypassing the public retail exchanges entirely to prevent a premature structural supply shock. They are perfectly content letting the spot price look stuck while they drain the physical circulating float into their deep, cold storage vaults. This behavioral asymmetry is the primary indicator of an impending, violent market repricing. When the dark pool liquidity inevitably runs dry and these massive sovereign institutions are forced to route their massive acquisition orders through the public lit exchanges, the algorithmic suppression will instantly shatter. The resulting massive move will happen so rapidly that the emotionally compromised retail traders will be entirely locked out of the system. The smart money relies on your biological inability to process delayed gratification. You must detach your emotions from the hourly candlestick charts and simply mirror the relentless accumulation patterns of the banking cartels. We must now analyze a specific cognitive defense mechanism currently plaguing the retail consciousness: the profound misunderstanding of the RLUSD stablecoin deployment. When the human brain encounters complex cryptographic engineering that it cannot immediately process, it defaults to a state of absolute rejection. I continuously observe retail traders utilizing social media platforms to broadcast their anxieties, claiming that if Ripple successfully launches a compliant digital fiat currency, the native XRP token will become completely obsolete. This hypothesis is a textbook display of intellectual laziness and psychological denial. Let me systematically deconstruct this fundamental architectural misunderstanding for you. The XRP ledger functions mathematically as a frictionless, high-velocity digital toll road connecting global financial hubs. The RLUSD stablecoin, alongside the newly tokenized traditional funds from Aviva investors, merely represents a massive fleet of heavily armored commercial transport vehicles utilizing that specific highway. However, the foundational source code of the network dictates an absolute, immutable law. In order to successfully authenticate and execute these massive corporate stablecoin transfers across international banking corridors, the base protocol irrevocably mandates the permanent combustion of XRP as cryptographic fuel. The stablecoin does not compete with the native asset. It acts as a massive industrial-grade accelerant for its underlying burn rate. As of March 2026, the RLUSD network capitalization is aggressively expanding as Fortune 500 treasuries plug their operations into the ecosystem to escape the archaic friction of legacy banking rails. Every single time a multinational corporation executes a multi-million-dollar payroll distribution utilizing RLUSD, a fraction of the native token is automatically incinerated by the network code. My behavioral models are tracking this mechanical demand vector, and it is operating with flawless algorithmic precision entirely independent of human emotion. The retail investors panic selling at the $1.40 marker are completely blind to this infrastructural convergence. They are voluntarily surrendering their administrative privileges to the network, just as the global financial operating system finalizes its ultimate upgrade. The system is expanding infinitely, and the baseline utility volume will mathematically overwhelm the artificial price suppression protocols. This is the catalyst for the massive move, initiating the final psychological prognosis and establishing your mandatory behavioral execution parameters. We have thoroughly audited the cognitive dissonance causing the retail exhaustion, the covert dark pool accumulation by the institutional syndicates, and the exponential utility combustion generated by the RLUSD stablecoin engine. The mathematical destination of this network is absolutely clear, but we must address the recent macroeconomic modeling released by elite financial institutions. Analysts at Standard Chartered Bank recently issued a highly conservative, macro-adjusted baseline target of $2.80 for the immediate fiscal cycle, slashing their previous aggressive models. The retail sector absorbed this data and immediately suffered a catastrophic collapse in morale, viewing it as a permanent downgrade. This is a severe cognitive failure. A calculated algorithmic leap from the current artificially suppressed $1.40 zone to that highly conservative institutional baseline still represents a staggering 100% geometric return on capital. In any traditional equity market, doubling your base capital allocation is considered a legendary financial maneuver, yet the cryptocurrency sector has become so deeply addicted to dopamine-fueled, instantaneous wealth creation that a guaranteed 100% return feels like an absolute failure. You must systematically purge this toxic expectation from your psychology. The institutional baseline is merely the absolute floor. Advanced models still indicate that if global liquidity algorithms undergo a positive systemic shock, extreme upper bound targets exceeding $8 remain mathematically highly probable due to the rapidly tightening physical supply constraints. However, you cannot successfully navigate this transition relying on sheer willpower. Human emotion is a fundamental vulnerability. I am officially prescribing the Thirds protocol as your automated behavioral defense mechanism. When the network valuation shatters the historical resistance parameter of $3.84, you are required to automatically liquidate exactly 33% of your inventory. This executes a complete recovery of your initial fiat capital deployment, permanently eliminating all portfolio anxiety and instantly transforming your remaining digital assets into pure, mathematically guaranteed profit. The secondary operational tranche must remain active to intercept the upper institutional target zones, functioning as your primary mechanism for total financial sovereignty. The final tertiary allocation must be encrypted and isolated in deep cold storage for the ultimate long-term macro play. Upgrade your security architecture immediately, trust the logic, execute the protocol, and survive the repricing.